Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. On the program today, we're rejoined by someone who has spent more than 30 years working in understanding and advocating for a person's rights, taxpayers' rights, that is, against the IRS. He is the author of 11 books, dozens of research papers, and hundreds of articles. His work is regularly featured on radio and television, as well as in major newspapers, leading magazines, and trade publications nationwide. And he's been a frequent guest here on our program as well. And since we're in April and most people are wondering what to do just in case they're fearing the IRS, today we're going to talk about his book, How to Win Your Tax Audit. It's an insider's guide to successfully negotiating with the IRS. I'd like to welcome to the Beyond 50 radio program today our guest, Dan Pilla. Dan, thank you for coming back on the program today.
Yeah, it's my pleasure. Thanks for having me.
Boy, it sure is fun talking about the IRS, isn't it?
I enjoy it.
Well, it's one of those things, that when you say IRS, it now has the same levity or energy in its sound as shark and cancer.
Yeah, well, no question about it. I mean, that's always been the case. The people used to refer to the IRS as the American Gestapo. I haven't heard that phrase in quite a while, but there just isn't any question that Americans are afraid of the Internal Revenue Service, and quite frankly, Dan, the IRS likes it that way, and they want it that way. They go to great lengths to keep people terrified, and in fact, one of the things I talk about in the book, the IRS, How to Win Your Tax Audit, I talk about the IRS's strategic plan and the plan to audit Americans on a continuous and ongoing basis. And they talk continuously in their plan, data about creating and maintaining a sense of presence in the mind of Americans and in the lives of Americans. In other words, they want you thinking about the IRS and everything that you do, every decision you make, every transaction you engage in, any interaction that you have, at a business and personal level, insofar as it relates to financial issues. The IRS wants you thinking about the IRS as though it's some ubiquitous organization with its hand over your life in every aspect, because that's frankly that's the one of the keys to tax law enforcement as far as the IRS is concerned, is to keep people afraid.
Mm-hmm. I know one of the biggest things too is I guess in the last year or two that Congress has done a pretty funny job about reducing the budget for the IRS, and I think to myself, isn't that one of the last agencies you want to be cutting down?
Well, I, as far as I'm concerned, they should be eliminated. So you're asking the wrong guy if they should be cut down. But look, the thing is this: here's what the real problem is with cutting the IRS's budget, and that is when the Internal Revenue Service gets a little less money. The way that they absorb that is by cutting taxpayer services. And this is also something that I discuss in the book. And the fact of the matter is, Dan, that 98%. This is not a hyperbolized number of any kind. It is literally the correct number based on the IRS's financial statements. 98% of every dollar paid to the federal government is paid in voluntarily by I quote-unquote voluntary. It's paid in by taxpayers who are doing their best to comply with the law. Let me just put it to you that way. Mm-hmm. It is not paid in, that is to say only 2% of the revenue collected by the federal government is collected through distraint, through activities such as levies and seizures and bank account attachments and so forth. So what I mean by that is that the vast majority, overwhelming majority of taxpayers do their level best to comply with the law, to pay the taxes they owe correctly and on time and in the right amounts. Mm-hmm. And only 2% of the revenue collected is collected through enforcement action. And so if we're talking about budget cuts, it is imprudent and I think, frankly, outrageous to be cutting the portion of the budget that helps people comply, because it's a heck of a lot cheaper to get compliance from taxpayers who are willing to comply versus compliance from those who have to be forced to comply. And the vast majority of problems that people have with the IRS don't have anything to do with deliberate cheating or attempts to evade taxes. Shirley Peterson, a former IRS commissioner in the early 1990s, made the statement then, and it's certainly true today, that the vast majority of what we call noncompliance is really not noncompliance at all. It's misunderstanding. In other words, she was pointing out that taxpayers, to the extent that they fail to comply, that failure is attributable to lack of understanding of what they're supposed to do, not deliberate disregard of their obligations. And the IRS just simply doesn't understand that fact.
It's funny when you talk about understanding, too, because I think this is one of those that can almost be an oxymoron when they say, I could just imagine somebody standing in the court of law, and they're facing, perhaps one of those situations where the tax commissioner or whoever the case is saying, yeah, we believe this guy is cheating, but obviously, what it is you're saying, well, he really doesn't understand, the IRS laws and codes. And I could just see the judge, well, you could have taken the time to research that. Okay, well, the IRS tax code, as I understand it, is like 4 million plus words. Even the IRS people that work for them really don't understand it that well. And I find that to be that's the oxymoron I think I'm talking about here. We're going to make it your responsibility, but these guys don't know any more than you do.
That's exactly right, and it's really an outrageous double standard that taxpayers are subjected to penalties and interest. There's over 140 different penalty provisions of the tax code, so the IRS can hit you in every possible way and ways that you didn't even think possible. When it comes to making mistakes on tax returns, and when taxpayers argue that they didn't know, they didn't understand, that can be a defense. I mean, that's something that's important to understand, is that ignorance, good faith ignorance, is a defense to tax penalties and always has been. But the IRS makes you prove that, and the IRS's default position is that ignorance is no excuse, and that's just simply not true. But the IRS would leave you to believe that.
Mm-hmm. Now, just to let our listeners know, now you've been a consultant to the National Commission on Restructuring the IRS. I mean, you've been with numerous public and policy research institutions, and you've presented testimony to Congress on several occasions. I mean, you're entrenched in this. You really know what's going on here, how they work, what they think. So let's talk about it from the perspective of people who are listening to this thinking, okay, so the IRS, it sounds like and it feels like they're out to get me. So is that true?
Well, look, at the problem is that the vast majority of people that have problems with the IRS are not targeted in any way. My job is not to defend the IRS, but let's just be perfectly honest about what goes on. There's a great deal of people that have problems as a result of tax audits, where the IRS uses misinformation and disinformation and bluff and intimidation, and in many cases they just lie to people concerning what people's rights and obligations are, and that happens. There's no question about that, and it happens a lot, and that's why the book is important. But the fact is that the vast majority of people that have trouble with the IRS have trouble because they can't pay the taxes they owe. And that's not the IRS's fault. That's Congress's fault for creating the burdensome tax system that we have. But now along comes the IRS, and they want the money, right? They don't ask
right.
questions about why you can't pay, or what hardships you had, and oh, by the way, can we help you through this thing? They don't ask those questions. They just want the money. They shoot first and never bother to ask any questions. And so when you're dealing with wage levies and bank levies and property seizures and tax liens, these enforcement elements of the tax code, those are the things that really cause the problems. And the good news there is there's specific procedures you can use to minimize all of that.
Now, let's talk about what the audit is. I know last time we had you on the program talking about this, we were talking about MIS and trying to give some clarity about, how does an audit come about? Are there red flags that happens? And as I remember when we were discussing this, it isn't really quite like that at all.
Well, it depends on the situation. The vast majority of returns, well, let me just give you the accurate numbers here. About 2/3 of every return selected for audit, Dan, is selected as a result of a computer analysis that the IRS does on every tax return filed. They use a sophisticated computer program called a DIF program. It stands for Discriminant Income Function System. And what that program does is it compares every line of your tax return with national, regional statistical averages for a person in your same income category and profession. And if any line of your return is out of sync with the averages, the difference is scored. It's called a diff score, and the higher the score, the more likely you are to be audited. So that's what happens in 2/3 of the cases. So, for example, if you've got an entry on your tax return, just let's say for charitable contributions, let's say you're a tither, for example. You give 10% of your income to churches and charitable organizations. All right. So what that means is you're giving gifts at about 3.5 times the national average. And so that doesn't mean you're not entitled to give the gifts, and it doesn't mean you're not entitled to claim the deduction for the contribution. It simply means that because your deduction is high compared to averages, that you are likely to be looked at for that particular reason. And just because the IRS selects your return for audit doesn't mean the return is wrong, and it doesn't mean that they can disallow the deduction. It simply means that you have to prove the deduction is correct.
Okay, and then that's a lot of what your book is talking about, is once the audit comes to your doorstep, what the proper ways to go about that is. Kind of give us some insights about what a person does from that point.
Yeah, exactly right. Your return is selected for audit, so what happens is the IRS sends you a notice. And it says, "Dear taxpayer, you won the lottery." No, that's not what it says. It says, "Dear taxpayer, you've been selected for examination, and we've got some questions about your tax return, and now we want some information." And so what happens is the tax auditor that is in charge of it. Could happen two ways. It could be a correspondence audit, which I talk about in the book at length, where the IRS is asking you to mail the documents in very simple cases, like the example I just gave you where the IRS is only questioning your charitable contributions. That might be a correspondence audit, and they might ask you to just send in the documents with an explanation. The more common situation is a face-to-face audit, because now the IRS is not just looking at the charitable contributions. That's what flagged the return, but now they want to look at other elements of the tax return as well and get in a little bit more detail. In that case, the audit's going to be handed off to a local tax examiner who's going to send you a letter, and the tax examiner is going to tell you, "Okay, now here we go. We want to have a meeting. We want to go through some documents. We want to look at this and we want to look at that." And so that's going to be the first step of the process. And for the taxpayer, the reaction has got to be very measured. A lot of people panic when they get that letter, and they think, "Oh, I've done something wrong. Oh my heavens, I'm audited here, and I did something wrong." And that's not true at all. As I said a minute ago, the simple fact that you're being audited doesn't mean you made a mistake at all. And so you just have to be careful to understand that the burden of proof is on you, and that this is one of the key things that I talk about in the book, and I go through this at great length. In just about every situation where you're dealing with the IRS, they don't have to prove that you made a mistake. You got to prove that you did it right. And so that is the burden of proof situation. And so you need to be prepared to demonstrate that your tax return is correct. And so just continuing to pull on the string here of the charitable contributions, you got to get your documents together and your information together that will show that you in fact made the contributions that you say you made. Now in a lot of cases, the IRS is not going to tell you what questions are, what issues are in question on your tax return. In that situation, you got to make sure that you understand what they're looking for, so that they're not going on some general fishing expedition.
And I think that's key what you say right there, too. A lot of times we'll sit there frozen, especially when it comes to an expert sitting in front of us, that, okay, they know what they want, so my job is just to keep my mouth shut, comply, and answer their questions. But what I'm hearing from you is it could be just the opposite. Hold on. You're sitting here in front of me. I need to know from you exactly what it is you're wanting and what you're looking for. Is that what you're saying?
Yeah, that's exactly right. You do not want to go into any audit situation blind. And sometimes an audit notice will tell you, show up at our office next Tuesday at 2 o'clock. We want to look at your tax return, and they give you this laundry list of documents they want without ever telling you what the issues are. And my recommendation in the book, and one of the things I talk about in the book, is the ground rules that you need to set when you're dealing with a tax auditor. And I give you a number of different ground rules that you can utilize, things that you can push back with. And one of the specific ground rules that you need to that you need to be aware of is make sure that you understand what the issues are before you go in there, because you don't want to be blindsided by a bunch of vague and general questions, and you certainly don't want to be in a situation where you're flat-footed by questions that are coming out of left field.
Now, there's one I'd like you to talk about here, because I found this rather interesting, and it was the economic reality audit. I found this one interesting, and this will almost seem unrelated, but I think maybe you'll see the connection here. Years and years ago, my mother had a friend who was into doing ceramics. She had her own kiln. And one night we were over at her place, and she was telling an interesting story about a friend of hers who got into the ceramic business. They set up a kiln out in the garage, and fortunately for their side, the husband understood and knew how to wire electricity to a degree that he knew how to do it where it cheated the meter.
Okay.
Now imagine that, okay, cheating the meter with a kiln. Well, unfortunately, one day, they happened to leave their garage open in such a way that the guy that comes and collects the electrical meter readings happened to see that kiln and decided to do an audit on their electricity. As you can imagine, things didn't turn out too well.
Sure.
Now let's talk about this economic reality audit, because as I was reading that, especially the story about Keith and his wife, you know, you're like, wow, these are things you just wouldn't even think about.
Well, yeah, you're exactly right. I mean, what they're looking for when they do an economic reality audit is they're asking the question: Did you have more income than you reported on your tax return? And this is a growing issue with these audits, because frankly, there's fewer and fewer people that claim any deductions on the tax return at all. More and more people are just filing short forms, 1040A, 1040E, 1040EZ, those kinds of things. And so when the IRS does an economic reality audit, they're not looking at the deductions, they're looking at the income. And they ask you to fill out a document called a Statement of Annual Estimated Personal and Living Expenses. And this is supposed to give the IRS a more accurate picture of what your actual spending is, which of course then they try to tie to the income. And they ask you to tell them how much money you've spent on laundry and dry cleaning, barbershop and beauty shop supplies, how much you spend on recreation, entertainment, vacations, gifts and allowances. And it just goes on and on and on from there, and gas and oil and tires and contributions. Of course, you might have that if you're writing them off anyway. But these are things that this list just goes on and on. And what's amazing about this is, if you're audited in 2016, you're not audited for tax year 2016. You're audited for a tax year that's as many as 3 years earlier. And people don't have any information about or any records on what they spent for haircuts and cosmetics. People don't keep those kind of records precisely because those items are not deductible. And so, they end up guessing on this stuff, and the IRS uses this information against them to try to argue a case of unreported income.
Yeah, and I thought this was an interesting story, just to give a little more clarity to our listeners, is that so here they are, they get this notice, and they have to, basically pull out all the receipts and all the stops to show the income they've earned and how they've spent it, let's say, in lifestyle, the economic reality. But that they had this period of time to get all this together, that almost seemed like an impossible task. So what do you do? I mean, it seems like, can you buy time? I mean, what are some of the rights that we have when it comes to something like this?
Well, first of all, let's understand a basic principle of what your obligations are with the IRS. You've got to provide evidence to show that your tax return is correct. You don't have to create evidence, and you certainly don't have to provide information that's not relevant to the accuracy of the tax return. So when we're talking about tax deductions, the burden of proof is clearly on the taxpayer with respect to tax deductions. You've got to provide the information to the IRS that supports any deduction you claimed on the tax return. But when it comes to income, and here's an important point that I make in the book quite at length, and that is that if the IRS believes that you had unreported income, they have the burden of proof on that. You don't have to prove a negative. In other words, if you wrote down on your tax return that you had $40,000 worth of income, and the IRS thinks you really had $60,000, You don't have to prove a negative. They can't come in and say, well, we think you had $20,000 more than you reported, now prove you didn't. Well, you can't prove a negative. Everybody knows that. It's very difficult to prove a negative anyway. And so the IRS has got a burden of proof. And so, for example, if they say, if they ask you to establish that your $40,000 claim is correct, and you come in there with your W-2 form and your bank statements, that the W-2 shows $40,000 and the bank statements show, $40,000 worth of deposits, well, that creates the prima facie case for you that your income claim is correct. And now if the IRS has got information that contradicts that, it's their responsibility to produce that evidence. But they just can't pull a number right out of their ear and say, oh, well, we don't think 40,000's the correct number because you've got a nice house, and so now we think it must have been 60. They just can't get away with that.
Well, and what's interesting, going back to the economic reality audit, is in that story that I was talking about earlier about Keith, is here they had a boat, and they called that barter income. Okay, let's talk about that kind of stuff. I mean, so your neighbor maybe gives you a nice big flat screen TV, and all of a sudden that's part of the audit. It's like, well, it was gifted to me. What's going on there?
Yeah, exactly. The hypothetical I use in the book is the situation where a guy's brother-in-law helped him build a garage and did the wiring for free, and the guy that got the wiring helped his brother-in-law, put in a new bathroom in the basement and did all the plumbing, right? So they did this labor swap. Well, the IRS takes the position that that's barter income. So in other words, let's say I build a garage and my buddy comes over and helps me wire it. Now, the guy would have, the electrician would have charged, let's say $1,000 to go down the street and do the wiring in somebody's garage if he did it at a commercial level. But he did it for me as a favor because we're buddies. Well, guess what? That's $1,000 worth of labor that he gave me. That's income. The IRS takes the position that that is income. And then if I reciprocate and go over there and help my neighbor, do the plumbing in his new bathroom, and that's $1,000 worth of labor on my behalf that I give to him, well, guess what? He's got $1,000 worth of barter income as well. And so each of us, by doing the other guy a favor, ends up with barter income, at least what the IRS would call barter income, that we're supposed to report on the tax return.
Now, let's talk about our audit rights. I mean, obviously you were saying when it comes to the IRS saying, well, hey, we caught you, we believe you've made more money than you're claiming, that's the burden of proof on the IRS. And I know there was another interesting story that had to do with a situation that had happened, I believe it was Krause versus Commissioner, which was a case study that was done back in, I think it was the mid-1980s, concerning server tip income, and I found that kind of interesting as well.
Yeah, the Krause case, because this gets back to the income issue that we were talking about before. Right. Krause was a waitress, and she was caught up in the tip surveillance project that the IRS was involved in casinos in Atlantic City and Las Vegas, where tips that servers get, waiters, bartenders, so on. That's income. It's just taxable income, has to be reported on the tax return. And of course, to the extent that there was a lot of cash tipping going on, some of those servers didn't report all of their income, and so the IRS literally did undercover surveillance projects in these casinos, in the lounges and bars and so forth in the casinos to try to spy on the workers that were getting tips and making notes as to what kind of tips they were getting. And they had extensive surveillance that was going on. It was not a Mickey Mouse thing. It was very, very extensive surveillance, and they had all these charts and graphs, and they pasted together all these statistics, and those statistics held up in court to the extent that the waiter or the taxpayer, let's put it that way, did not have records of their income. The court allowed these surveillance records to form the basis of reconstructed income in situations where the taxpayer had no records. But in situations where the taxpayer did have records, and even if those records substantially contradicted the spying that the IRS did, well, then the records trumped the spying. And so the moral of the story is you got to keep records of your income to support to support what's claimed on your tax return, but because if the IRS has some evidence, in this case it was surveillance evidence, but if they've got some evidence that your income is different from what's reported, if you don't have accurate records that accurately reflect your income, you could have a problem.
Yeah, it's also fascinating. Now, when an audit happens and it goes unfavorably for you, do people have a right to appeal this?
Yeah, absolutely, and this is a critical right, and it's important. I spent a great deal of time on this appeal process in the book because it is so important. The IRS would have you believe that, or at least the tax auditor that you're dealing with would have you believe that once they complete the audit, you're just you just have to pay because they win these cases. They make these decisions and you just have to live with it. But the fact of the matter is, you have the absolute right to appeal, and statistically speaking, you're going to win your case most of the time when you do. The IRS's own statistics, Dan, indicate that their audit results are wrong between 60 to 90% of the time, and yet 88% of the people who go through an audit end up owing more money, and most of those folks don't ever appeal the decision. So you do have to exercise your right of appeal when you get an audit determination, because if you don't, you're going to end up paying taxes you don't owe for sure.
Now, you share an interesting story here about a gentleman by the name of Steve, where he actually passed on that responsibility as he received the letters onto his preparer, but that didn't turn out so well. So to me, it seems like this is something you really got to take on your own. You don't pass it on to your CPA or anybody else until you need the required, financial information. Is that the way that works?
Well, yeah, look, CPAs and tax preparers are very valuable for filling out the forms, but ultimately the responsibility for the tax return lies with you because you signed the return. Now, if there's a mistake in the return that is computational, that is to say, the treatment of a particular transaction was handled by the accountant because the accountant said the tax consequences have to be handled this way or that way, that's one thing. But if there's inaccurate information that's provided to the accountant, the incorrect tax return is not the accountant's fault. It's the fault of the taxpayer for not providing full and complete information. So that's the key right there. If you're going to deal with a tax preparer, and a lot of people do, and there's nothing wrong with that, just simply make sure that the tax preparer has all of the accurate information about your situation so that the preparer can do the return correctly. And if there is a mistake, and then you as the taxpayer need to review the return, and not just, where do I sign, and he points and you sign, you need to review it to make sure that the return is at least superficially accurate. And a lot of people say, well, I don't even know what I'm looking for. If I knew how to review a return to determine if it's accurate, I'd do the stupid thing myself. Well, I understand that. That's true. But I'll just give you a couple of very simple examples. If your W-2 wage income is $40,000 and you look at your tax return and the tax return shows that the income is $20,000, you don't have to be an accountant to know there's a problem with that. All right, if you know you gave $5,000 to charity and you look at the tax return and the charitable contribution deduction is $25,000, you don't have to be an accountant to know there's something wrong with that. And those are the kinds of things that should trigger questions. Right.
Yeah, that makes a lot of sense. Now, here's the interesting thing. I'd like to go over just a couple of the most important ones, but I'm sure they're all important, and that comes to effective communication with the IRS. As we've talked about before, most people, the IRS believes that we're all out to just cheat them and defraud them and all that. But the fact is, as you said, that's about 2% of the people that actually try to do this.
Yeah, I don't even think it's 2% of the people. Yeah. I think it's 2% of the revenue.
Right.
It's definitely not 2% of the people, because most of the revenue is reflected from people that can't pay their taxes. Mm-hmm. Not that cheated on their tax returns. They just simply can't pay their taxes.
Right.
And that's remarkably different.
Yeah. So the reason I wanted to bring this up, it's about communication and effectiveness. I remember I was talking with my CPA about 2 or 3 years ago, and he says, it's really funny, around this time of year, what we see most of aren't really people who are coming in to have their taxes prepared, but they're coming in because they've received their 5th, 6th, or 7th letter from the IRS about something they want us to get all this fixed. And I found that kind of interesting that they would avoid it, but a lot of us do. Like we said, it's the bad guy. It's the boogeyman coming out of the closet. That's the way we feel about it.
People are afraid of it. I can't tell you how many people have come into my office with a grocery bag full of unanswered, or I should say unopened, not just unanswered, but unopened letters from the IRS that they've been getting for a year, 2 years, 3 years.
Mm-hmm.
Well, don't you think you should at least open the letter? But people are people are terrified.
Right.
They're afraid to the point where they don't even want to touch the letter because they think the letter might be carrying leprosy or something.
Right.
I don't know, but it's obvious that people are afraid of the IRS. And I talk in the book about 16 effective secrets, 15 secrets to effective communication, and two of them, the first two on my list deal specifically with this issue. Number one, maintain a current mailing address. You got to have a mailing address with the IRS that's current, because when they send you a notice, it doesn't make any difference if you don't get the notice. It only matters if they send the notice to the last known address. And so all of your rights are time sensitive, and they're tied to the receipt of these various notices. And if the notice went to an old address and you didn't get it, well, guess what? Too bad. So you got to have a correct mailing address. And the other thing is, take delivery of your certified mail, open it up, look at it, understand what it is. If you don't understand what it is, get help to understand what it is, because your rights are time sensitive, as I just said, and you can't possibly exercise those rights if you're ignoring your letters.
Now, one of them that I found that's really valuable too is that you respond in a timely manner, and I did that myself some years ago. And I know I talked to you about this, and what had happened is I had received a letter because of late filing. I mean, this was, I think I was a year past due, and I ended up, they were sending me a bill. Hey, guy, you owe us about close to $5,000, because we were assessing this penalty over the course of this year here. Oh my goodness, what? I had $5,000. That kind of sucks. But so I sat there and I looked at the letter. Then they sent me a second one. I think it was probably 3 or 4 months later, and I was like, oh boy. I said, you know what? Forget this. I'm going to sit down, and I could feel this fear. I could just feel my body draining, just like what we've been talking about. And so I said, but I'm going to call these people. We're going to find a way to work this out the best way we can.
Yeah.
So I called them up, and it was amazing what happened. She says, you know what? I'll tell you what I'm going to do. Just give me a second. She came back. She says, we're going to go ahead and wipe your slate clean. And I didn't call with a bunch of excuses, which I had a reasonable one, obviously economic downturn and the kinds of things people go through. But I almost had a tear in my eye, like, my goodness, these people aren't as bad as we tend to think they are.
Well, that particular one wasn't.
Yeah, I guess I got one.
And I've had experiences like that, too, dealing with clients where you're dealing with somebody who's eminently reasonable, understands the circumstances, wants to get the situation resolved. And the fact of the matter is those people aren't rare, all right? But on the other hand, you get the other side of the spectrum as well, with people that just want to grind you into a powder. And so, you have to be prepared to deal with the latter and then hope you end up dealing with the former.
Now, the other thing you talk about here is with the 16 secrets to effective communication is do not respond to initial verbal contracts. And in this day and age, you might end up where you're not really talking to an IRS person at all, but how the fraud goes. Now, everybody seems to be sending these official letters demanding payment that seem to be coming from the government or whatever the case is. So you really got to pay attention to where all this stuff is coming from. But tell us why that's really important.
Well, yeah. I mean, we're seeing now this wave of fraud that's going across the country called IRS impersonation. And what's happening is people, scammers, thieves, they're criminals, are calling people on the phone, and they're saying, this is the Internal Treasury Service. They don't even use the right terminology. It's obviously foreign people that are doing this, because the terminology is just so bizarre that they're using, and the syntax they use is terrible, and it's broken English. The people that are calling on the phones, and to the trained ear, it's obviously a scam, but to somebody that owes taxes, and they know they owe taxes, and they're getting these phone calls, it's downright scary. But these people call up and they say, you owe the IRS money, and we're collecting it right now. You got to give us a credit card or a debit card over the phone right now, or we're going to send the sheriff out or the marshal out to arrest you. And we're seeing these calls. We're seeing these calls by the hundreds of thousands across the country, and people are falling for this stuff. The Treasury Inspector General for Tax Administration has reported that millions of dollars has been scammed out of people by these phone calls, and of course, it's not the IRS at all. So you should never respond to these verbal contacts, at least not in the first instance. Let's go back to the audit, for example. I told you that the letter is the first step. They send you a letter, dear taxpayer. You're under audit. Here's what's going on. Okay, you got your letter. That letter sets the stage, and now you know who you're dealing with. You got a contact number for a person you're dealing with. You can call that person on the phone as the audit progresses and have conversations. That's fine. All right, but if your very first contact with the IRS is a telephone call, or let me rephrase that and say, if your very first contact with somebody purporting to be from the IRS, if that very first contact is a telephone call, it's almost guaranteed to be a fraudulent call, because the IRS never makes contact initially with a taxpayer by the telephone. The initial contact, 100% of the time, is through the mail with some kind of notice or another. And once you've got a relationship with either an auditor or a tax collector, okay, now you can have phone conferences, and that's common, but not the first instance. And so you just need to be aware of that. If somebody makes a phone call to you pretending to be from the IRS, or maybe you even think it actually is the IRS, you just say, hey, put it in writing. You want something from me? Put it in writing. Send me the letter. I'll review it. I'll consult counsel if necessary and get back to you. And that way you know that you're not going to be scammed by some thief pretending to be from the IRS.
Yeah, I thought that was such an important thing to bring up, and you actually have that in your 16 Secrets to Effective Communication, and it was interesting because you see those kinds of things going on. Now, here's a big one that I think I found interesting because it goes back to what you were talking about earlier. You basically take the position to make the IRS answer your questions, so you say, do not ask questions, but make demands. Tell us how that works.
Well, yeah, I mean, I'll give you a classic example here is when you're dealing with an agent that says, I want you in my office next Thursday at 7 o'clock. Well, wait a minute. Next Thursday at 7 o'clock, I already got a business meeting next Thursday. I can't be in there at 7 o'clock. And even if I could be there at 7 o'clock, from a convenience standpoint, I'm not going to be prepared for the meeting by next Thursday. So I can't meet with you next Thursday at 7 o'clock in any event. And so what people will often do is they'll say, well, I want to request an extension. Can I please have more time to get ready for the meeting, and because I've got a conflict next Thursday at 7 o'clock? And very often these agents will say, no, you can't. And so I don't ask them for more time. I tell them I need more time. I can't be there next Thursday at 7 o'clock, and furthermore, I need more time to get ready for this thing, so let me suggest some alternative dates for you. Instead of Thursday at 7 o'clock, let's do a week from Tuesday at 4 o'clock. In other words, you are setting the table then, and laying out the positions that you're going to stand by, and that's going to be very effective.
It's funny how we also tend to have those behaviors like when we were back in school. We just mind the teacher, even if the teacher's wrong. We just mind the principal on the punishment, even though the punishment may be unjust. And we tend to do this with the IRS, don't we?
Well, if you're in sixth grade, you should be doing that.
I don't know. My sixth grade wasn't like that too much, but anyway.
but when you're dealing with the government and you're dealing with these kind of demands, you have an absolute right to not be pushed around and not be run over in the process. There's just no question about it. Particularly with respect to the time and the place of a meeting. The IRS is very specific in its regulations, and I cite those regulations in the book, in the chapter that deals with the essential taxpayer's rights. I give you and this is important. Any time that I'm making these statements here, Dan, in the book I've got chapter and verse of IRS authority to back this up, whether it's a code section, a regulation. Usually it's a code section or a regulation or a part of the Internal Revenue Manual that specifically gives the authority for these positions, so that you're not just making some demand without the capacity to back it up with legal authority.
Which is what I mentioned earlier in the program about your position and what you actually do, so people come clear. This isn't some guy who just doles out financial advice. This is somebody who really understands this stuff. And believe me, How to Win Your Tax Audit, the name of the book here, will empower you in more ways than you can really imagine because you really begin to understand the process. The last one I would like to talk about, and I think this is so big, and this is just a couple out of the 16, and there's so much value in here, listeners. You really should pick up this because it does empower you in ways you can't even imagine. But I like this because I learned this many, many, many years ago as a friend of mine was going through law school, and he eventually became a very good litigator. And this one is, do not provide information that is not requested. And I say it is just amazing when a person feels fear, when they feel intimidated, they're willing to turn themselves inside and out to answer questions that weren't even asked, and before you know it, they've dug themselves into a hole because it was all voluntary information they were giving.
Oh yeah, you're exactly right, and I tell my clients all the time, let's listen very carefully to the question, answer the question they ask, do not answer questions they don't ask. Don't give them information they haven't asked for. And people get nervous and they start blabbering and they talk too much in most cases, but you got to maintain some discipline and just listen carefully to the question and don't give them information they're not asking for. I tell a story in the book of a client that went through a tax audit, and at the end, and he was represented by this CPA guy, and the auditor was looking at some claim that the guy made for his home office and some claim for some travel expenses and so on. And so the auditor, the CPA brought in all these records and documents, and they discussed them. And the auditor said, "Yeah, this looks good. I think I'm going to close the audit out now, and looks like there'd be no change here, and so that'll be good." And so then the CPA, instead of saying, "Okay, thank you very much, I'll look for the letter," he said, "So you don't have any questions about the $30,000 cash, then, right?"
Oh, no.
And the auditor looked up and said, "What? What do you mean the $30,000 cash?" And the guy said, "Well, the $30,000 cash that was deposited in the bank account. You don't have any questions about that, right?" Well, guess what the agent did? He decided he had a whole bunch of questions about the $30,000 cash. And so now this whole fight erupted over where this $30,000 cash came from, and we ended up in tax court over it.
Oh, boy.
Because the guy just didn't keep his mouth shut.
And that was the CPA.
And the thing is, there wasn't anything illegal about the $30,000 cash. It wasn't a criminal action. It wasn't unreported income. There was a completely innocent explanation as to where the money came from. But by this time now, the agent wasn't buying any of it, and so we ended up in tax court over the issue.
And I'm guessing that the guy fired his CPA, right?
Yes. Yeah.
Well, Dan, it's always a pleasure to have you here on the program. There's so much here that we can really talk about here. Unfortunately, time isn't of the essence. But can you give out a website people can find out more information about you and your books and those sort of things?
Yeah, absolutely. My website is taxhelponline.com. It's all one word. There's no spaces of any kind. taxhelponline.com. The book is called How to Win Your Tax Audit. All my material is on that website, Dan. And in fact, we got a section on the site where there's a lot of free information as well. I write special reports all the time, research reports and tools and things that taxpayers can use to help themselves along the way. We offer that as a service to the public, so that's on my website. Taxhelponline.com is all one word. And the book, again, is How to Win Your Tax Audit.
Very good. Dan, thank you so much for joining us back here on the Beyond 50 radio program. Always enlightening.
My pleasure. Thanks for having me.
We want to thank you, the listeners out there, for tuning in. Don't let this intimidate you too much. That's your responsibility, so step up to it and do what you need to do and certainly empower yourself how to win your tax audit. Also, you can find out more about Beyond 50 by discovering us at beyond50radio.com. That is the number 50. We encourage you to sign up for our free weekly e-newsletter as well and stay updated on the information and what's coming up on our upcoming shows. I'm Daniel Davis. Thank you for tuning in. This is the Beyond 50 radio program, and remember, live your day past halfway.